Hello, good morning, everyone. Sorry for the slight delay. I'm not gonna have too much of an update today. Realistically, I'm gonna talk about some of the news and some of the areas and what had happened yesterday. Yesterday, we did see the first sell-off in quite some time in the futures market. Right, even tech took a downward move, along with big overall indices taking a slip to the downside. Right, we got red across the board, and there's still some more weakness here pre-market as we continue the sell-off. That doesn't necessarily mean that we have the start of this next leg lower until some conditions are met. We're going to talk about those now. Main news is still circulates around the debt ceiling, right? The continuation of the talks are brought to attention by investors and traders everywhere. And realistically, a lot of people are shaping up for the worst case scenario where we do have the potential for a larger swing to the downside, as we've seen in the past. JP Morgan is warning clients as well to take some precautionary measures to look at longer dated spreads in the VIX volatility market, right? Where they're looking for July spreads to open up calls to the upside as a hedge against what could potentially happen for large client portfolios. Realistically, there is always the probability that such things might happen, right? We're nearing the date where that can happen, and we could see a little more shakeout and downside. And I think a lot of people are still putting a massive bear case scenario and fear mongering among this, rather than seeing that overall there is still consistent bidding in the market. And yesterday was a pullback, so we'll see if today marks the continuation to the downside or not. And I'm going to explain what would happen, what would need to happen for that to actually occur. So the market's still wondering whether the Fed can engineer a soft economic landing or a recession is on the way. Goldman Sachs is also more bullish on the economy, and economists estimating just a 35% chance of a recession compared to the average 60% from major banks, right? Hard landing, if a hard landing does materialize, Goldman Sachs equity team has picked its favorite stocks to put cash to work realistically. And these stocks have a combination of low valuation, strong balance sheets with soft dividend histories. So some of these are Microsoft, Johnson& Johnson, Coca-Cola, and Hormel. There's a long list that you could see, even if you just like Google it. But there are expectations that we have a softer landing, maybe not the softest of landings, but the potential is of seeing that still potential more downturn before we do see some more of the upside. But I think that this immediate tech rally has kind of um, tired itself out and can proceed with a pullback to see if strong-handed bulls do approach the market yet again. So that's the main thing that everyone's going to be watching, how this debt ceiling unravels over the next few weeks. And today, after the bell, it is Wednesday. We do have NVIDIA earnings coming out, right? Where we'll hear AI many a times. And AI systems take many industries by storm. It's been a massive AI rally. Calls have been growing on the need to regulate emerging tools and address the potential downsides of technologies. And just last week, CEO of OpenAI, the creator of ChatGPT, testified to Congress about the necessity of government intervention for mitigating the risks of increasingly powerful artificial intelligence models. So lawmakers don't arrive at any specific proposals at the first AI hearing at Capitol Hill, and several ideas are brought up. And more realistically are going to be brought up on the horizon. It's a massive wave right now that's taking a lot of tech by storm. It's really increasing the price across the board, NVIDIA being one of the main figures, and it's reporting earnings after the bell, which can really help us understand what the directionality of the next market move might be coming into the decision of the debt ceiling. So, in responses to one of the most powerful tools in technology of our time, the Biden administration is taking new steps to advance a responsible artificial intelligence. So, the first is updating its roadmap called National AI R&D Strategic Plan, which outlines key priorities and goals of federal investments in AI research and development. It also released a new request for public input on critical AI issues like protecting individuals' rights and safety, and also harnessing AI to improve lives. So, again, we'll see how that shapes up. Social media went through similar scrutiny during the growing stages in the 2010s, and it was under a microscope, right? There's still some talk about that, right? We've seen Zuckerberg testify multiple times over, and it's not going to be a very easy route for AA. But you can see social media, for the most part, depending on the company, obviously, has seen a lot of growth. So in today's session, a lot of people are gearing up for potential downside continuation, but I'm going to warn you guys of a few specific things for that. Now, the downside realistically can open up. There is strong potential for that happen, but you guys need to understand that we're also back within a distribution block on the S&P 500 futures, and the lower band of that distribution block finds itself into the low 4120s. The low 4120s is a super key area. If we do target and hold that area, I think that's where strong-handed buyers might pick this thing back up. We're below a lot of key resistance points, and we're holding out some of the sell. I thought that into these high 30s, we can get somewhere of a pickup on the bull side, but we didn't get too far off. If we manage to close under the low 4120s, you can start to agree that the downside is going to open up a little more. Now, another thing is if we manage to close under the 410s, right? 4100s, especially those areas, I think that the mid to low 3900s are a very are a pretty fair reality to consider. I want to see today if the buy side just opens up and holds this thing back into this key distribution. The top of the distribution is 4160s. I'll be watching these high 30s, low 30s, and also low 20s on the S&P 500 futures to see if those areas do hold on a bid. I don't want to just start selling rallies aggressively. I also don't want to buy every single dip, but this would be the area we're nearing a very strong area from the prior balance where strong-handed buyers would have to step into the market to actually sustain this rally. Now, if that fails, right? Um, no sound. Oh, some people can't hear. If those areas hold, realistically, we're probably going to see a continuation back to the upside, but that's a key area. I didn't see you guys messaging me in that chat. Um, let me see. Can anyone confirm or deny if the I can hear just fine. Okay. Interesting. I think some people just maybe have audio issues on their end. With that being said, uh, thanks to all. Hope everything is good for those that heard. I appreciate it, and we'll see you guys tomorrow and wrap up this week. Sorry that you couldn't hear. Maybe there's something wrong with the audio on your end, because I think the vast majority of people did hear this. So again, remember we have a workshop coming up into mid next week. We're going to start it and go from there. So thank you all, and let's chat soon. Check out the link in the bio as well.